Welcome to the Capital News. I am your host, Alex Karitis. Today is Thursday, October 8th, 2020. Thank you so much for joining me. And as I like to say on Thursdays, it's already Thursday. Can you believe it? Because that's our typical weekly update when it comes to initial and continued jobless claims, Federal Reserve's balance sheet, and M2 money stock, which of course we're going to get to, in addition to market performance. And I really don't want to discuss too much politics today. I'm quite honestly, I'm sick and tired of it. It's just really quite shameful, disgraceful, and disgusting. But that is sort of the state of affairs in which we find ourselves. However, there are a couple stories that I do want to touch on briefly, and that's what I'm going to kick off the podcast with. But today's podcast is titled Account Gimmicks Delaying the Day of Reckoning. Of course, that's a question mark. Came across an interesting interview this evening with Jim Chanos, infamous short seller and hedge fund manager, so we'll get to that. I've mentioned him before, but I wanted to share that with the audience this evening as well. But first to the politics to get this junk out of the way. Obviously, there's supposed to be 3 debates between the president, President Trump, and former Vice President Joe Biden. Well, the first one is already in the books, if we want to call that a debate. Of course, we call that a national disgrace, a national embarrassment here at the Capital News. But because of the president's current health situation, the second one is now in flux, at least for the second one to take place in person. And now we know that the debate commission has already ruled that the second debate, which is to take the form of a town hall style, is now going to be virtual. Well, the president doesn't like this. He says it's not worth his time. It's a waste of time to do this. However, watching Fox News all day and tweeting doesn't seem to be a waste of his time. But having this virtual debate is a waste of his time. Now, this could, of course, change overnight. We have seen the president change his mind day to day, hour to hour, with the most recent exercise of this took place this week with respect to him calling off further negotiations for spending, and then the very next day saying, oh, we got to get back and do it. I will sign something because the stock market sold off massively. And of course, all you got to do is say, well, we're going to talk, or the talks are going on, or we're going to do something. And then the crackheads on Wall Street, they take the bait every time, and then it rallies. And we saw a continuation of that today across the board in the stock market. But it's also quite fascinating, and maybe ironic, if you will, because prior to the first debate, the president was throwing some heat out there against Biden, right? Trash talking, as the president is inclined to do, saying, I want him drug tested, Joe Biden. I want him drug tested. And maybe he's going to come up with some excuse to not even have a debate because he's not going to be able to make it. Well, isn't it funny now that prior to the second debate, we have a president of the United States who actually is on drugs, and one of them is actually steroids, if you can believe it. And now he doesn't want it to take place in a second debate. Take part in a second debate, I should say. Again, that could all change, but I thought that was rather ironic and just a twist of fate within a week and a half. Joe Biden's taking drugs, he's not going to want to debate, and then all of a sudden, the president is taking steroids, and he doesn't want to debate. Again, you can't make this stuff up, folks. And to be perfectly honest with you, just from an analytical standpoint, there's really no reason, if the president wants to play these games of no longer debating, that hurts him more than it hurts Joe Biden. Joe Biden came out the winner in that first debate. The polls are starting to move strongly for Biden-Harris. The state races, especially with respect to the Senate races, are really starting to lean more towards the Democrats. So this could potentially turn into a blue wave. I don't want this to happen. I'd rather it be divided government. But, you know, it's not looking good right now for the Trump-Pence ticket. And Donald Trump needs a second and perhaps third debate as well to sort of regain his footing and perhaps shrink the Biden-Harris lead that is currently in existence. So like I said, he can change his mind. He's done it many, many times before. He's likely to do it again. But there you have it. Debate number 2 is up in the air. Then to the Midwest we go in the state of Michigan. We have Governor Gretchen Whitmer, who was involved with a kidnapping plot. She was the target of this kidnapping plot. It was fortunately thwarted by state police and FBI. But this is how dangerous, evidently, our politics is getting. I mean, and it's on both sides, which I have pointed out time and time again. This is not a right or left issue. This is a right or wrong issue. You can point to the left, you can point to Antifa and what's been going on in Oregon and in Washington State and elsewhere. But I said it's just as dangerous, if not more so, on the right, the far right, when you have these militia groups that are trying to come out and perhaps trying or plotting to kidnap a governor. This is going to get very nasty. So don't think that the craziness just happens on the left. There are just as many crazies on the right. Don't make this mistake that it's just the other side. It's everywhere. And if Donald Trump loses re-election, what do you think these people are going to do? You think they're just going to sit idly by, especially if they're already of the mindset that the only way that the president can lose is if it's rigged? Now, where do you think they got that idea from? Oh, that's right. The president of the United States put that in their heads. If he loses, it's rigged. If he wins, well, obviously that was how it was supposed to be. So there you have it, something to pay attention to. The crazies are out. They just need their justification. And we haven't seen the worst of the economic fallout, so there's going to be, people are going to justify a lot of actions in the not-too-distant future, especially in 2021. All I can say is, like I say every night, stay vigilant. So, to some market performance, we have the dollar index weakening a little bit further. Right now, it is trading at 93.448. That is the dollar index. And a little strength across the board with the euro, the pound, the Aussie dollar, and the Kiwi, which is the New Zealand dollar. Overnight trading, we have the Dow Jones futures up about 0.6%. The S&P 500 is up about 0.8, and the NASDAQ 100 is also up about 0.6%. Japanese cash trade is down about 0.4%. Decent gains across the pond in Europe, anywhere from 0.5 to 1.2% gains. Cash trade in Australia is also up slightly, about 0.1%. On the commodity front, a decent day for oil once again. We have WTI trading at $41.05, and Brent is at $43.19 a barrel. Natural gas, $2.63. Gold and silver, okay day, but right now in overnight trading, they are catching a nice little bid. We have gold trading at $1,910 an ounce, and silver is at $24.29 an ounce. To round it out with Uncle Sam's 10-year junk note, we have it yielding spot 77. So again, we are still trading higher than where we were over the past few months in that really tight range. So we've done some analysis and had some conversations on this as to why this might be the case. And again, when we were following the MOVE index, which is the volatility index of the bond market, we said, it did make a recent all-time low. And an all-time low, I should say, recently. Is that the calm before the storm? Because the bond market is the market. The bond market dwarfs the stock market. All right, so this is something to be very, very mindful of. This is what the Federal Reserve and other central banks attempt to control their respective bond markets. And nobody is bigger than the market, which has been, my theme since I started this podcast. It's been my theme for a lot longer than that, but I've only had this podcast since early 2019. But that's just the fact of the matter. They can pull out all the stops and stunts and tricks and do all this stuff, smoke and mirrors, and they're continuing to do it. And that's really the purpose of today's podcast as well, the title here, Accounting Gimmicks Delaying the Day of Reckoning, because it appears so. But for how much longer is the question? Because nobody is bigger than the markets. Not the president, not the presidency, not our government, not the Federal Reserve, not all the central banks combined. And like we warned in our book, The Cynic's Guide to Investing, which was published all the way back in 2015 already, if we as citizens don't take these problems, the structural issues facing the country, by the horns and try to fix them, then the market will fix it for us. Well, the structural issues have gotten much, much worse since then, and there's no end in sight with what's going on. In fact, they want to do more of the same. So the market's going to have its day with us, and it's going to be devastating and highly destructive for the vast majority of people, not just in this country, but on the globe. So be mindful. Now, let's get the Fed's balance sheet out of the way, and then we'll do a little bit more of a focus on the initial jobs claims. So the assets on the balance sheet here for the Federal Reserve is standing at $7,074 billion. This is a slight increase from the prior week, up about $18 billion. That's really nothing. I mean, $18 billion falls out of Jay Powell's pocket when he's walking from the Federal Reserve building to the Capitol building down in Washington, D.C. But nonetheless, slightly up from the week prior. M2 money stock, actually a little bit of a decrease from the prior week. And of course, this lags a little bit. This is for the week ending September 28th. But nonetheless, M2 money stock is down, about $70 billion or so. But still near an all-time record high at $18,652 billion. This is why members of the Federal Reserve are coming out on a daily basis, en masse, on bended knee, begging Congress to do more, because they know the game is up. They know the market is about to have its way with everything, and they are trying their damnedest to keep it going, hoping somehow that, I don't know, that somehow we'll pull ourselves out of it, even though we've dug ourselves an even deeper hole. Makes no sense whatsoever, but the honesty, again, honesty in leadership is not an option for these people. So this is what we get, and buckle up. Now, for the initial jobless claims for the week ending October 3rd, 840,000 Americans filed for initial jobless claims. Again, 840,000 was the number. Week ending October 3rd. This is worse than expected. Expectations were around 820,000. And again, we came in at 840. The week prior, September 26th, that figure was revised upward by 12,000. The original number was 837,000. It is now 849,000. Again, for the week ending September 26th, an increase of 12,000. When it comes to continuing claims for the week ending September 26th, because there's a lag on this figure, 10,976,000. This is a decrease from the prior week of about 1 million. So again, that is in the right direction. But don't forget, folks, as we were informed last week by the Department of Labor with respect to this report, and we covered it before that as well, the state of California is on a 2-week pause due to the amount that is in their backlog of claims that they have to handle. And they also want to implement a fraud prevention system. So, just when we thought we were finally seeing some light at the end of the tunnel, some of these programs, some of these things that acted with the Nobody Cares Act and the emergency facilities and all this other jazz that was put out there, kicking the can down the road, finally some of it starting to wear off. We said, okay, some of these numbers are finally starting to make sense a little bit more than they have been. Some of the distortions are starting to clear away, and here we have it. California is on a 2-week pause. Now, if this was the state of Delaware or Rhode Island or Connecticut, I really wouldn't pay much mind to it, because those economies aren't that large and they don't have that many people in those respective states. However, California is one of the largest economies in the world if it was standalone. And I think there's some 40 million people in the state of California alone. So that's something to be mindful of. So we got another 2 weeks of further distortionary effects in trying to gauge the jobs picture. And we know from last week with the last jobs report prior to the November 3rd election that was not a good picture. 3.8 million permanent job losers hasn't been seen since 2013. And then as we stated here as well, the median duration of those unemployed is at its longest going back to 2012. So that is in the wrong direction with respect to the jobs report. However, with the continuing claims, that's in the right direction. Fewer people claiming. Hopefully that means obviously that they are back to work. Now, when we take it all together for persons claiming UI benefits in all programs, this takes into consideration regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, pandemic emergency UC unemployment compensation, extended benefits, state additional benefits, and work share. We get a grand total of 25.5 million. This will be for the week ending September 19th. Recall this lags by a couple of weeks on this grand total figure. Again, 25.5 million Americans continuing to claim some form of unemployment insurance. This is a decrease from the prior week of about 1 million. The largest decreases were witnessed in regular state benefits and also in the Pandemic Unemployment Assistance Program, which is one of the children of the Nobody Cares Act. So there you have it, 25.5 million Americans continuing to claim unemployment insurance benefits, and we still have a very distorted picture in reality. Still because a lot of the policies enacted through the Nobody Cares Act is still in existence. Other moratoriums have been kicked down the road. They've been extended, so the can is kicked down the road further. And California's on a 2-week pause. So we'll see what happens over the coming weeks. It's really about the economy. It's about COVID-19 as far as the elections are concerned, healthcare, and maybe to some extent still the Supreme Court, which is that nomination, that could get really, really hairy and really nasty over the coming weeks. So we'll be sure to follow that as well. Now, with respect to Jim Chanos, hedge fund manager, legendary short seller, but he has long positions too. He has long the market in many aspects as well. But this interview was centered around commercial real estate. And of course, Mr. Chanos and company, his hedge fund, are looking for opportunities to short this side of the market, commercial real estate. He thinks residential real estate will also be problematic, but he thinks this time, at least to start it off, it's really going to be in the commercial real estate side of things, that there's just been an overbuilding of pretty much everything. And with COVID-19, it's just making it that much worse. But I was so happy to hear him say what we have been saying here for such a long time. There was a lot of weakness in the commercial real estate market prior to COVID-19. Again, folks, COVID-19, this pandemic, for politicians and central bankers, this is, for lack of a better word, this is a godsend to them because they get to use it as a cover. All of the business psychoanalysis that we do here, and we're doing throughout 2019, saying, blowing the whistles, raising the flags here, something ain't right here, folks. Something's about to give way, and then all of a sudden a pandemic comes. Oh, that was the reason why everything started to go down. Couldn't be because everything was rolling over beforehand. Oh, no, that had nothing to do with it. Let's all blame it on the coronavirus here to justify the unjustifiable. As I stated in my letter to my congressman and to my senators, representation and recourse. Check out that letter if you haven't. It's on thecapitalnews.com. Representation and recourse. I knew the games they were going to play. to, again, justify the unjustifiable, to do what they are doing and what they want to continue to do. It's insanity, and you're paying for it. And you're going to pay for it several times over. This is not a free lunch by any stretch of the imagination. So I was happy to hear Mr. Chano say a lot of this weakness was already taking place prior to the pandemic and the shutdowns and everything else that has been following. Now it's going to be in office space. It's going to be in retail. It's just across the board. Now the numbers are also staggering, because he notes that his team came up with a figure of about $6 trillion that is at risk. $6 trillion, that's a huge number in and of itself. And for some perspective, for some context, the great financial crisis, $1.8 trillion. Let's even round it up to be nice, $2 trillion. So we are talking about an issue here that is 3 times the size of what triggered the great financial crisis. $2 trillion, great financial crisis, mainly in the subprime mortgage market. Commercial real estate was relatively spared. To $6 trillion right now, at risk, in the commercial real estate market. That is a staggering figure. And that's just commercial real estate. That's not even talking about everything else. The energy sector, manufacturing, industrial production, construction, what's going to happen with all these other things, transportation, education, healthcare, all of it. This is just commercial real estate. And Jim Chanos talked about his history, and really where he really started making a lot of his money was back during the first commercial real estate collapse that took place. I shouldn't say the first, but one that preceded this one that's coming was back in the late 80s in conjunction with the S&L crisis, savings and loan banking crisis. In that time, bankers were prosecuted and they went to prison. Oh, the good old days. Now they just pay a fine, deferred prosecution agreement, the shareholders pay the fine, and the CEOs probably make out like bandits and get a bigger bonus. How far we've fallen in just a short 30, 40-year time span here. So Jim Chanos made a lot of money shorting the commercial real estate market back in the late 80s. And at that time, the commercial real estate market was about 15% of GDP, I think he mentioned in this interview. Or the collapse, the size of the collapse of what it affected was 15%. Now, with commercial real estate where it is today, that's going to be about 30% of GDP. So this is staggering. And nobody's really talking about it. And is it any surprise why the Federal Reserve is expanding its portfolio to include not just treasuries across the curve, not just residential mortgage-backed securities, but now they want to start buying and have been buying commercial real estate? They know what's going to happen, folks. Don't just listen to what they say. More importantly, pay attention to what they do. They know the significance of this. They know this economy is crumbling, and it's the global economy. It's not just here in the United States. This is the global system that lives and clings to ever-increasing amounts of debt, which means you're just stealing more and more prosperity from the future. This is why current and future generations and younger generations that exist now are suffering and are going to continue on so many different fronts. Again, this is a decline on the economic standpoint, the political standpoint, and the social standpoint. And we have no leadership. We have no honesty. These structural issues are not discussed in the political arena. They're not asked of the president or of former Vice President Joe Biden. They were not asked yesterday evening to Vice President Mike Pence, nor to Senator Kamala Harris. They talk about the economy at large, and then they bring out their BS numbers and they try to skew them in their favor. But that's nothing. That's nothing. I mean, these debates, the first one with the president and Joe Biden, they want to go through 6 topics in an hour and a half. Last night, the moderator wanted to get through 9 topics in an hour and a half. There's just not enough time. These are serious issues. 2-minute sound bites and a little bit of back and forth and some interruptions here and there. That's a huge disservice to the American people. You could spend one debate, the entirety of one debate, 90 minutes, just talking about the economy and different areas of it and what these guys plan to do about it. But they don't want to do that. They just want their 2-minute sound bites, the interruptions, a little bit of back and forth, and then move on to the next thing. Well, then have more debates. I'd be all for that. To actually get some answers on the record as to what these guys are going to do. A battle of ideas. That's what this country's supposed to be about. But it's really just about the 24/7 news cycle and getting your sound bites in. And that's a huge disservice. But another thing that Jim Chanos brought up in this interview that I watched this evening was taking a deep dive into the Nobody Cares Act and noting how in the Nobody Cares Act, it allows for companies to ignore some accounting rules, typically known as GAAP, GAAP, Generally Accepted Accounting Principles. And when you pay attention to earnings season, a lot of corporations, obviously, have to announce their GAAP earnings. And a lot of times they show their non-GAAP earnings too, which to me is somewhat ridiculous because they say, well, if we wanted to fix the books the way we really want to fix the books, well, we'd really be doing really well with non-GAAP. But since we have to follow some of these rules, GAAP, this is what we really earned. It's just a joke. But nonetheless, the Nobody Cares Act has put in some provisions that allows companies to create different buckets. Accountants love buckets. So you can create different buckets to whatever better suits your purposes. If you want to declare something as revenue, even though you actually don't have the cash, you can do that if you want to. And if you have expenses or costs, you can throw those into another bucket too, and that'll be deferred. So you really don't have to show that either. So your losses won't look as bad. Now, this has an expiry date at the end of the year. So is this something that is going to get extended as well? Because at the end of the year, these companies are going to have to make a decision. What bucket you're going to put it in, if you're going to put it in one of these buckets. And if you do, what type of taxes are you going to pay? Or what type of losses are you going to have to show next year? Because if the markets are at these levels, at these valuations, it's basically saying that their earnings are going to be strong. Well, we know that that's not going to happen. But what allows them to have a little bit more time to pretend that they are is this rule within the Nobody Cares Act that allows companies, corporations to create some different buckets to hide some money. Or to make themselves look better even though they actually don't have the cash, such as landlords. Because they can claim that they are using these buckets for the sole purpose, for the sole reason, because of COVID-19. If it wasn't for COVID-19, I would never have used these buckets, but since COVID-19 exists, I am using these buckets, and there you have it. This will cause a big unraveling with so many other issues. But this is allowing the markets to continue to run at the levels in which they are currently running. This is just another little bit of a stimulative effect, if you will. This is another steroid that the market is on, and it'll wear off, and it will be a nasty decline. despite what they throw at it. Why? Because nobody is bigger than the market. So with that, ladies and gentlemen, keep that in the back of your mind, the front of your mind, wherever you want. Go investigate it further. But I thought that was quite interesting. Makes sense with everything else that they've done. Again, and this just shows you the game that's being played. Everybody knows what's going on, but there is no honesty, there is no leadership, so they're just going to continue with the smoke and mirrors. That's what they do. This is who we vote for. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.